Good morning, everyone. Daniel here for the Daniel Eigenmann Finance Broker Forum. We're here on the foreshore in Perth on a beautiful, actually not that beautiful, is it? Wednesday morning. And I've invited Kristian Jeromson of Asset Reports to come back on the show because there's been some major changes to tax depreciation legislation that the Parliament passed on the 15th of November. And I thought it is worthwhile going over the changes because they are major changes. You know, Kristian said to me it's the major ones, the last 10 years. So, Kristian, can you tell us quickly, briefly, and in layman terms, what these changes are?
Yeah, so anyone who purchases a property or has purchased a property for investment purposes, an established property, after the 9th of May 2017, 7:30 p.m. to be precise, Daniel.
Okay, so May 9?
May 9, 2017,
yep.
Can only claim the construction of the property. They can't claim what we call the plant and equipment, which is the high value stuff. So,
for example, what?
Ovens, air conditioning units, pendant lights, smoke alarms, all the high value stuff. You can still claim the construction though, which is still
so that hasn't changed. It's just the high value.
Yeah, that's right. That's right. So still significant savings there for people.
Now, is it just the 9th of May, or is there something? If let's say if I have a property and I live in a property and I decide that I want to rent it out.
Yeah.
Are there changes to that as well as far as
there are changes to that, and that came in as of the 1st of July. So if you have an existing property that you are residing in and you've turned that into an investment property, then once again those changes will affect you, and you can only claim that what we call the Division 43 if you want to get taxi about it. Yeah, technical about it. But obviously anything moving forward, if it's an investment property and you are putting in any of those additionals, you're replacing the oven or you're replacing air conditioning units, then yes, you can claim that. But anything, if you're buying an established property or turning your property, an established property, into an investment property, then those changes will affect you.
So what I'm really hearing, Kristian, is that there's been some major changes. So keep in mind two dates: May 9th, 2017, and 1st of July, if you own a property and want to turn it into a rental property.
That's correct. Yep.
Now, to me, it's very complex. You know, you mentioned a few things. You use too many in industry lingo.
Yeah.
So obviously, if I have an investment property and I want to make sure that I maximise my tax depreciation, what do I do? Because it's getting too complicated.
Yeah, of course. Well, I'd definitely suggest to talk to the professionals, which is obviously us at Asset Reports, or give Daniel a call and he can put us in contact with yourself. But definitely ask the questions. Reality is there's generally deductions to be found in most properties, so it's never silly just to ask, just to think that there's no deductions there for you. You know, we may be able to backdate some things for you so you can claim some extra deductions, but it's always best to speak to the experts. I guess when I go to get my car serviced, I take it to a mechanic.
Absolutely, absolutely. Now, in terms of, I understand that you want to talk to someone, but I guess the question that's going to pop up in most people's mind is, how much is that going to cost me?
Yeah.
No, to talk to you, and then to have a report actually done.
Yeah.
And then are these fees tax deductible?
Yeah. Okay. So to talk to me, it's for free.
So I can give you a call, and I'll put the numbers and all your contact details in down in the post. Yeah.
So we do free assessments. So that's for residential or commercial or rural properties, whatever's.
So when you say assessment, what do you mean?
So we'll jump online and do an online assessment. So we'll have a look at your property. And ask you a couple of questions. As I said, they're never too intrusive. We just want to get some key dates from you to see whether or not there's any deductions available.
So obviously that would be when was the property built?
Yes.
Originally, and then did you buy it before or after the 9th of May?
Yep.
Or have you turned it into a rental after the 1st of July?
Pretty
so
basic.
There's first three.
Yep.
And then based on that, you can already access some information online, and you can give the caller an assessment of roughly how much would be available.
Without a doubt.
Then obviously, if you talk to Kristian, then you can decide whether you want to do it or not. And in your experience, you find that there are tax depreciation opportunities in almost any.
Yeah, that's right.
Any property, isn't it? Whether it's commercial, residential, whether it's old, new.
Yeah. So the cut-off date, I guess, just to touch on that, is probably we're looking at 1987. So anything built prior to 1987 that is in very original condition.
Oh, right, okay.
There may not be anything in, but if we're talking about an old 1930s property, a nice bungalow or something, reality is that's been renovated at some point in time, may have been extended. So we'll assess that. We'll have a look at that. We'll speak to council. We'll speak to the people who need to know.
So really, it costs you guys nothing to find out how much you can actually save in taxes.
Yeah,
really, that's what
nothing.
it is about, isn't it?
Yeah, exactly.
And now, okay, if there is enough tax depreciations, then what would you do?
So we'd obviously discuss the opportunity with you to say, okay, well, if there is a need for us to do a full site inspection and generate a report for you for tax purposes, then we can discuss pricing then, depending if it's residential or commercial.
But we're not talking about huge amounts of money, are we?
Oh, no, not at all. And so if we're talking a residential property, it could be, as much as maybe $515, and our fee's tax deductible, and that's
fully tax deductible.
Fully tax deductible.
Right. And so it costs you nothing then.
Yeah,
pretty much.
Depending on your tax bracket.
That's right.
But that'll give you a report which will last you for 40 years. So
for 40 years, okay, until you make some changes, obviously.
Until you make some changes, and then we'll update your report for free anyway. So. Yeah.
Beautiful.
Yeah.
So really, I mean, what are you waiting for? If you are, and that's for existing investors. So remember the key dates: 1987. Anything before that, built before that, there's a little chance it might be something now, unless there's been some major renovations in the meantime. May 9th, 2017 for the changes.
Yeah, that's right.
To what can be actually claimed for established
properties. But if you're buying a brand new property, or you're buying commercial property, then you get to claim absolutely everything, which is great.
Okay, cool.
So there's still some serious deductions for newer, brand new properties and commercial properties. So.
Okay, that's great. And obviously, for July 1st, if you're turning your property into a rental.
Established property into a rental, yes. If those, what they say is if those items are now second hand or have been used, they're not brand new, then unfortunately we can't claim those. So.
All right, okay, cool. So that's for existing investors?
Yes.
What about new investors? I do a lot of, I deal with people that are looking at buying investment properties. They might have a pre-approval. They'll come back to me, and say, okay, to ask me about the property, but they can also ask you about the tax depreciation potential of one, or if you're looking at A and B, property A and B, you can help with that as well.
Yeah, that's right.
Okay.
Well, they say people generally look at 14 properties before they...
14, all right.
Yeah, before they
So would they be abusing your system if they say...
No, not at all. Not at all. Give me as much work as possible. So, we can assess to say, well, option A is going to generate this, option B is going to generate this. So a lot of people still don't take into account tax depreciation into their finances. And we never know what's going to happen, with the...
That's a good point you were making. Do you want to explain that quickly?
Yeah, so this has probably been one of the biggest changes in tax depreciation in the last, over a decade. And we don't know what's going to happen. If a new government gets in, then, are they going to scrap negative gearing altogether? Are they going to scrap the tax depreciation opportunities? So get in now whilst
you can. Yes.
Exactly.
As we said, I don't get anything from referring to Kristian. We work together for some time now. I know he does a great job. He does, yes, if you have an account, speak to them about that, but that's not what they do. Kristian and Asset Report specialize in tax depreciation. Right. It's not expensive, it's tax deductible. If there's no potential for tax depreciation, it will cost you nothing. So pretty much, what are you waiting for? All right, and remember, if you're looking at buying a property, you can also ask Kristian for tax depreciation potential. All right. So that's it for us today. I will remind everyone of the key dates in the post. I will give Kristian's contact details as well in the key dates. If you've got any questions about home loans, you can give me a call. Remember, my fees are completely free because I get paid by the bank to bring them the business. All right. So have a good week.
Enjoy.
It's probably too early to wish you a good weekend, but have a great week. If you got any questions, you know how to get in touch with me. Cheers. Thanks, Kristian.
Absolute pleasure.
Cheers. Bye.
Bye.